The MBS Live Dashboard is a one-of-a-kind platform with live market data, live and customized alerting capabilities, and real-time discussion with originators around the country. It also has real-time discussion with me, Matt Graham, the founder and CEO of MBS Live. I've been on the site every day for 13 years and don't plan on going anywhere anytime soon. It's a web-based platform. There's nothing to download, and the amount of value you can get out of the site is immense if you understand how to use it. So let's talk about how to use it. This video is for everyone, for new users to the site that have no idea what's going on, to those of you who have been with us for a long time and are simply looking to get acquainted with the new dashboard. Due to the broad nature of this video, it will be long, as you probably have already gathered by the time at the bottom of the screen, and it will also be fairly broad in nature. For some of you, that means that it will move a little bit more slowly than you'd like. For others, don't be discouraged if you find that it is still a little bit confusing, even though I just said it's going to be broad. That actually is not uncommon if this is your first time on the site or your first time being exposed to the underlying components of the secondary mortgage market. It's a lifelong process, really, or just a process in general to get acquainted with it, but we can help you with that, and if you do, it will pay dividends, both in terms of understanding the stuff in general and using this specific platform to interact with it. So without further ado, let's talk about how you would do that. The dashboard is set up in workspace format. That means there are various components that you can enable, disable, move, and resize. And once you find a layout that you like, you can save that. You can actually save multiple layouts. Let's say that you want to use this platform on different devices, maybe a laptop, a work computer, a home computer. You can save different layouts for each of those applications. Let's say you find you want to use the platform to present financial concepts to clients or show them how markets are moving. You may want a different layout for that. In order to find which components are currently enabled or disabled on your screen, and in general, to find just about anything that you can do or change on the site, just hover your mouse over the left side of the screen to bring up the left navigation menu. This is a new change for existing users too. In this menu, you can see the active Windows button. You can click on that there. The same button is also available at the very bottom right of the screen. Clicking that will let you know which windows are enabled and disabled. For the purposes of this video, we're just going to leave these 3 disabled. That's 2 real-time charts in the video stream. Reason being, the real-time chart is a duplicate of the one that we already have up on the dashboard, and we will talk about what this is and what it means in a moment. The video stream, the reason we're leaving that disabled is that it will take up some space on the video, and as we'll see when we talk about the news stream, clicking on a video inside the news stream will bring up that video player anyway, and most users will then simply minimize that window anyway. When you first log into the dashboard, it will look something like this. If you're not sure what you're looking at in terms of these numbers, I would definitely recommend stopping by on the Learn tab first and foremost. That's going to be at the top of your screen. If you are, like most of our users, a mortgage professional who'd like to learn more about what you're seeing, just start on this page. It will walk you through most of the basics. As you move through this page, make sure you click on these links that are highlighted in blue, and those will take you through to more detailed explanations of the underlying content. All of that stuff helps you build a really solid base to understand what we're going to talk about in the rest of this video and to understand the basic functions of the securities that we're going to discuss. So let's say you've gone through the Learn menu and you have a general idea that MBS are mortgage-backed securities and that they are the most important building blocks of mortgage rates. We can watch their intraday movement in order to get ahead of potential intraday reprices from lenders. That's really historically the first reason that originators have been interested in following MBS prices. But over the years, we've found that it's useful just to follow them for a general sense of the trends in interest rates. And being able to intelligently discuss those trends with your clients and business partners builds credibility, helps you get more referrals, retain more business, and ultimately make more informed decisions about locking and floating, whereas you may have initially approached this endeavor in search of some guru-like wisdom or clairvoyant call about the future that can help you get an edge on locking or floating. I'm here to tell you that you can develop your own method to approach that stuff that is going to be just as valid as anything I could tell you. And ultimately, the highest and best use of this site from a lock float standpoint is to rely on me as somebody that can provide you concepts and talking points and considerations that inform your own lock float decision-making process, because it shouldn't really be the same for anybody. But if you really need to know, then you should definitely lock. More on that later. Moving on to the components. If you understand MBS and that MBS prices correlate with mortgage rates, then you understand there's value in following it on an intraday basis. The very first component on the MBS Live dashboard that would help you do that is the real-time pricing window. That's this guy right here. This contains a table of multiple mortgage-backed securities. Generally speaking, there are only going to be one or two of them that are important at any given time when it comes to following rate movements. It also contains a table of treasury prices and yields. You don't really need to look at the prices per se. They are included to allow people to better compare the relative movement between treasuries and MBS, but ultimately treasuries trade in yield, MBS trade in price, and there is no perfect way to extrapolate rates or yields based on MBS prices unless you are running a complex algorithm at a big financial firm to ascertain MBS yield. Not important, not useful for our purposes. You may notice, depending on what buttons you've clicked, that these prices could be displayed with a dash or with a decimal point. That's the difference between ticks and basis points. Ticks are a market convention for bond traders, and they are no more complicated than just dividing that number by 32. They're 30 seconds of a point. That's how bond traders have traditionally viewed and discussed prices in the bond market. And if you want to continue to do that, you'll notice that I do it quite often. And more over the years, I've tried to do both at the same time so as to avoid confusion. But if you're used to that, use it. And if you're not, use basis points, but just be aware there's a difference. So 103.15 in terms of ticks would be the same as 103.45 in terms of basis points, give or take. 103.16, 16:30 seconds would be the same as 103.5. From time to time, you will notice a slight variation if you're just going to divide the ticks by 32, because the decimal points actually allow for a little bit more granularity. So there can be a rounding issue if you are using ticks. So if you have to know down to the nitty gritty half of a 32nd or a 64th of a point, the basis points will tell you that. But it's not important when it comes to following bond markets the way we follow them or the way any originator really needs to follow them. And I'm not just saying that. I truly believe it. And I didn't used to when I first started following this stuff, but I promise it's true. At any rate, as these numbers move throughout the day, you might see lenders change their prices. MBS rose fairly well on the day that this is being recorded, and you see a few lenders have repriced positively. Over time, you'll get an idea of how much MBS price movement it takes for a lender to change their rate sheet. In general, falling prices do more to cause reprice risk. That would be lenders repricing for the worst, aka raising rates or fees in response to these MBS prices falling. Which of these should you watch? Fortunately, you can click on any one of them to see how relevant we say it is to lender rate sheets. There's a whole article that's linked in the Learn menu that talks about which coupon you should watch. Definitely give that a read. But when all else fails, just click on the thing and it will tell you. As far as what these numbers actually mean, the white numbers here are the actual price. So if UMBS 2.5 coupons are at 103-15 or 103.50, that would mean it's $103.50 to buy $100 worth of principal in that particular MBS coupon. You could think of that roughly like a loan price on a lender rate sheet. You can't think of that like a loan price for a rate of 2.5%, however, and the reasons for that are explained explicitly in that knowledge-based piece I just talked about which coupon you should watch. The important part is that's the price. There is a green or red indication next to the price to let you know how much it has changed from the previous session. But as you know, lenders release rate sheets at different times of morning. So if you want to use the My Change column, you can select your own time of morning that your rate sheet came out or shortly thereafter, and then follow along for the rest of the day to see how much markets have moved from the time your rate sheet came out. That can give you an even better idea of reprice potential or risk. Should you watch treasuries? It's a good question. I think in general, it makes sense to follow things like the 10-year treasury yield and the 5-year treasury yield. 2s and 3s we include just to have some context for how short-term versus long-term rates are trading. Not super important to follow. The 10-year treasury yield above all others, we often refer to as the most important benchmark or yardstick for the broader bond market, especially when it comes to longer-term interest rates like mortgages. It is like the guidance giver. It's like the cruise ship or the aircraft carrier that deploys things like mortgage-backed securities to fly smaller, shorter missions. There are all kinds of analogies for that. In fact, we have a knowledge-based piece called Why So Much Focus on the 10-Year Yield if this is an MBS site. Good reading there if you're curious about the relationship. But the bottom line is that treasuries do not dictate mortgage rates. Treasuries do more than most anything can to speak to broad momentum in the overall rate market. And MBS mortgages operate in that broader market. They operate on a spread to treasuries. Pretty much everything does. Corporate bonds, municipal bonds, MBS. Treasuries provide a risk-free benchmark for what the cost of lending and borrowing should be in the U.S. and how far away in yield any given loan is from a treasury helps us determine the risk and the value associated with that bond. To reiterate, treasuries have a price there. That's just to help you relate that movement to MBS movement, but they also have a yield. That will help you get an idea of how much actual rate movement is happening. Although I also publish a daily interest rate update for 30-year fixed loans. It's an average of top-tier lenders, and it appears at the bottom of the screen, and it will be updated at a certain point in the morning, generally around 11 o'clock Eastern time, sometimes later. So just be aware of that. If it looks like it's off, it's probably going to be updated. Treasury yields are on the right-hand side, and their day-over-day change, same story. If it's green, that will mean yields have fallen. If it's red, it'll mean they're higher. The 2s versus 10 spread is something you can pay attention to it if you're familiar with it. It is a financial tool, basically, to help visualize or conceptualize the shape of the yield curve, which to some economists and market watchers is an indicator of what's known as term premium, which is a market term for being paid more if you tie up your money for longer periods of time. Some think that it has implications for potential recessions and economic expansions. But again, unless you're already interested and familiar with that, don't worry about reading anything into the 2s, 10s, or tracking it or anything like that. Say we have a basic understanding of the real-time pricing table. Oh yes, and by the way, if you're super duper into government loans, then you might be interested in following Ginnie Mae coupons. Otherwise, conventional conforming stuff is UMBS all the way. Don't miss the fact that there's a 15-year tab here too. We still have members that sometimes ask why their MBS prices are different here than what they're seeing on the charts. And it turns out that they just had the 15-year tab clicked up there. For the most part, 30-year MBS, UMBS specifically, are going to determine lender reprice schedules. Once we know what MBS are, we can look at them on a chart. If your chart is not necessarily all the way on the screen, you may have to move some components around. So I'm going to be doing that as I do the video, but we will get to a point where we talk about how to lock those changes in place. Whatever you click on the live pricing table, you can also say view in the main chart, and it will bring that up in the main chart. It might have these funky symbols in here. You're not sure what these are. These would be candlesticks, but let's say you don't want to view candlesticks. Click on this settings gear, the top right of the chart, and tell it to be a line. Say you don't want this funky red line here. That's a 25-day moving average. It's not important to understand right now. You can disable that. Click on your gear icon and you're back in business. This is a super long-term chart. Let's say that's not relevant and you just want to see the past 2 days. You can go to the zoom chart line and tell it just to view the past 2 days. Want to change the chart you're looking at in the middle of the day? You can drop down here and do that. You want to see if I have any active analysis open on a chart. You can click on that here. It will change the chart to whatever I drew the lines on. And if it looks maybe like these lines aren't resting on any particular level, it's probably because I have it in candlestick format. So switch that back to candlesticks and you can see how a recent trend took shape and how prices perhaps broke out. It can be relevant for all sorts of reasons. Typically, it will be because I am talking about them. That is essentially the real-time chart. It will have previous open, low, and high prices at the top. It also has the actual price and the day-over-day change. And remember, you can bring up to 3 of these things. I find that I like to have a couple short-term charts and a long-term chart. I like a lot of charts. You might like only one. It's up to you. But pretty simple tool. It's just a visual representation of the numbers we talked about in the live pricing table. That's all well and good, but how are you actually going to use it? Let's use MBS 2.5s as an example with today's pricing in a 2-day chart, and we'll talk about it. So if we notice, I'll put this in basis points for this video. If we notice yesterday, prices were at 103.5 and they dropped to 103.33 overnight. Interestingly enough, this video is being recorded on a day where MBS have switched to their next coupon delivery. Whoa. Getting confusing, right? MBS deliver once a month, and the price for any given MBS is based on its month of delivery. In other words, the prices for stuff that's going to be delivered today are different than the prices for the stuff that's going to be delivered a month from today, even if it's the same coupon. The reason for that is time value of money. If I am going to buy today's delivery, I'm going to get my money back or get my first interest payment 1 month sooner than I would if I bought the next month out. So moving out to that next month carries a lower price. That's part of the drop in prices seen today. I just included that explanation in case you're wondering why this chart shows green numbers at the top, as if MBS have improved today, when the chart makes it seem like they haven't improved today. So in fact, they have improved, but this left side of the chart was that previous month's coupon. This right side of the chart is the new month coupon, which started at a lower price. So it started with a bit of a handicap, and we're not going to count that against it because it had that same handicap yesterday. It just didn't appear on this chart. So on a day following MBS settlement, the day over day change is going to be based on the coupon that we are currently charting. So right now it's June coupons. Yesterday it was May. This is the change of a UMBS 2.5 June coupon between today and yesterday. And yes, they existed yesterday. They exist for several months at a time. So you could even trade July coupons right now. And traders definitely are trading them. And they definitely have a lower price than June coupons for the reasons that we just discussed. But we digress. The video will get very long if we dive into all these explanations. But that is the kind of explanation that you can get if you explore the knowledge-based content, or if you don't see that kind of explanation, ask a question and I'll make a video specifically for you. Back to business. If we know that prices began around 103.3 this morning and they moved up to 103.45 and held around those levels, it could be justification for a few lenders to offer better rate sheet prices. If you're relatively familiar with the increments that generally connote change on lender rate sheets, you know it's about 1/8 of a point at a time, give or take. So when we see about 1/8 of a point of a movement in either direction, we start thinking about reprices. And if you hear nothing else about how do I use these numbers on these charts, that would be it. Take a look at the price, make sure you are watching the relevant coupon. You can find that by clicking on it. Hey, look at that. UMBS 2.5 is the most relevant. And if that thing moves more than 1/8, then you know that there is about 1/8 of a point in price of positive or negative implication for mortgage rates. Now, not every lender is going to respond to that in the same way at the same time. There are a lot of different factors that go into that. The time of day that they released their rate sheet today and the time of day that they may or may not have repriced yesterday all come into play. You take a look at yesterday's prices. They were falling all day. If the lender released rates at 11:30 and didn't update prices again, they would have a lot farther to fall this morning than a lender who updated rates at the end of the day yesterday. If the lender didn't necessarily drop or raise rates that much, drop prices that much, they might be much less inclined to offer a price improvement because their morning rate sheet would have been more aggressive than it needed to be. But bottom line, follow MBS. 1/8 of a point, things are happening. How big can the movement be? Well, we've seen more than 2 points in a single day and in 2 different directions. That's not common, but it can happen once in a blue moon. Generally speaking, once we get over 1/4 of a point of movement, you're definitely wanting to think about negative reprice risk if that movement is lower in price. Fortunately, if you don't want to think about it too much, you can just subscribe to the alerts that I put out. You can even set up your own custom alerts to come out based on parameters that you choose. To find out how to do that and to learn about many other features of the site, tune in for part 2 of this introductory video series.